All right, welcome back, everyone. This is your daily health check for the Plazm Protocol. It's day 58, so let's break down all the key metrics and see where we stand for the short term. And let's just jump right into the big number for today. We are seeing a really solid recovery of 2.67%. After all that volatility yesterday, this is exactly the kind of stabilization we wanted to see. So, taking a look at the dashboard, here are the vitals. Plazm is holding strong at $2.07. And hey, look at that. eShare is also in the green at $13.82. Both of our core assets are looking pretty healthy today. So you're probably wondering, what's driving this? Well, the single biggest reason, honestly, is a massive, and I mean massive, drop in new supply pressure. Just look at these numbers side by side. Yesterday, we had 860 new Plazm hitting the market. But today, that number has been slashed to just 367. That is a huge difference in the daily emissions. And to put a number on that, that's a 57% decrease in new supply in just one day. That gives the protocol so much breathing room. It's exactly what we needed. And it's not just about the new tokens coming in, it's about where the existing supply is. This chart tells such a great story. A huge 55% is staked. That's conviction right there. Another 27% is in LPs, and a really impressive 13% has been burned forever. This shows you the community is really buckled in. So what's the bottom line here? When you filter out all the staked and locked tokens, there are only 4,980 Plazm that are actually liquid, immediately sellable. That float is tiny. Okay, so we've established that the sell pressure is way down. Now, let's flip the script and look at the other side, the defense. Just how much firepower does the protocol have ready to go? All right, first line of defense, the buy and burn. Think of this as our frontline soldier. It's sitting there with over $51,000, split between ETH share and USDC, just waiting to automatically buy up Plazm and take it out of circulation for good. And right behind that, we've got the buy and build fund providing backup. It's got another 32 grand. Now, this one's a little different. It's not just about destroying supply. This is for more strategic moves, buybacks and investments to help the protocol grow. So you add those two together, our primary active defense pools, and that gives us over $83,000 of immediate firepower ready to defend the price. But wait, there's more. That's not the whole story. We also have to add in the profits, the actual cash, that we've already harvested from our yield engine. That's over $43,000. So when you add it all up, our total deployable ammo comes to just under $127,000. Now, this is a really, really important clarification. That nearly $349,000 in the DEX5 vault, that's not defense ammo. Think of it like the factory. It's the working capital, the engine that's generating all that yield. It produces the claimed profits that we can then deploy, but it's not the ammo itself. Okay, so we know our defenses are strong. With that in mind, let's talk about the built-in safety nuts. What would happen in a real, absolute worst-case scenario? This ladder here is perfect for visualizing this. At the very bottom, if only the base liquidity was defending us, we have a hard mathematical floor at 75 cents. But if we deploy all those defense pools we just talked about, that floor jumps way up to $1.25. And right now, we're trading at a very comfortable 66% above even that stronger floor. All right, so the present is looking pretty solid. Let's shift gears and look ahead. What does the next week have in store for us? Here's the calendar of expected releases for the next 7 days. You can see there's a bit of a spike there on day 61, but honestly, it's nothing crazy. It's all well within a manageable range. No big scary cliffs this week, which is great. So if you add all of that up and multiply it by today's price, what are we looking at? The total potential sell pressure for the entire next week is about $92,000. And this is where it all comes together. This is the key comparison. On one side, you've got that $92,000 of potential sell pressure for the week. And on the other side are $126,900 of deployable ammo. I mean, the picture here is pretty darn clear. Let's put a hard number on that. That gives us 138% coverage. What does that mean? It means we have more than enough firepower to buy up every single token that's scheduled to be released over the next 7 days, and still have plenty left over. Okay, let's wrap this up. After looking at all this data, what's the final verdict on the protocol's short-term health for day 58? The data really speaks for itself, doesn't it? The conclusion is clear. The protocol's short-term health is stable. We've got a price recovery that is backed up by some seriously strong fundamentals on-chain. So, just to recap the main points for you, releases are way down. Only 5% of the entire supply is even liquid right now. Our defense fund has over 126 grand ready to go, and that gives us 138% coverage for the whole next week. Bottom line, the protocol is doing exactly what it was designed to do. So that's the short-term picture. But the biggest test is still coming. In part 2, we are going to do a deep dive on the day 78 cliff. It's the single largest unlock in Plazm's history, and it's now just 20 days away. You are not going to want to miss that analysis. We'll see you there.